So let's talk about inflation. Gas prices are up 50%. Used cars are up 37%. Beef is up 13%. So what's going to happen to this economy? How will this affect home sales? Will we see the prices go down? And how must we prepare for Inflation Gate 2022? All this and more coming to you right now. Hello, and thank you for watching. I'm Wayne Turner, real estate broker. This information is coming from you just from my experience of being in the real estate business, having sold more than 4,000 houses in 25 years. But enough about me. What about inflation? What is it? How does it happen? Now, inflation 2022 is quite simply when the price of goods goes up. The price of goods and services go up to meet the demand of the people. So basically, when the demand is high from people purchasing items, the consumer goods tend to go up, and they go up such a rate that people don't really realize it until all of a sudden you wake up and like, oh wow, we're at 7%. How did that happen? When the demand is high, the price is high. When the demand is low, the price is low. Now, the Federal Reserve Chairman Jerome Powell just met a few days ago, and he said, look, we're going to have to raise interest rates. It's the closest thing, the fastest way we can get this economic train to slow down. Now, Powell also stated that the economy no longer needs economic stimulus, economic help, aka stimulus checks are cut. So how do they know this? How does this happen? I'm glad you asked. First, the job market is better than we've seen in years. There's tons of jobs for people who want and are willing to work. I mean, there's many employers paying 40% above minimum wage, and there's tons of businesses out there that I'm sure you've seen the banners, and they're offering bonuses, signing bonuses for people to come and work for them. Now, as I mentioned, the inflation is at a 40-year high at 7% according to the Consumer Price Index. Now, the goal for the federal government is to maintain a 2% inflation. We're at 7, they want to maintain 2. By maintaining 2, that will definitely help and assist in preventing any sort of recession, and it will make for a stable, healthy market with just average 3 to 4% per year appreciation. Now, Powell also stated, he and others, myself included, that we will continue to see a rise in inflation as we go into 2022. Quite simply, as I said before, this is a big train. It's taken a while for it to get to this point. It's going to take a while to stop it. So as a result, come March, they've announced that they will be raising the interest rates. They haven't done so yet, but the rates will be going up. We'll probably see a 4% rate. And basically, it's to slow the spending of consumers. The more something costs, the less people will purchase it on what they call time. Remember that when your grandparents used to say, I'm buying on time. Well, buying on time means you purchase it today and you pay it at a later time. So what happened? Why all of a sudden all of a demand? Why all of a sudden it seems like there's not enough of anything to keep up with we as consumers purchasing things? Well, part of it is basically because of the economic freeze from the pandemic around the globe for the people actually producing goods for us as consumers. So look, when you really dive into it, before you look at the shortage of goods, you have to look at the shortage of people producing the goods. It doesn't matter if you're running a factory that robots and building cars or building computer chips. At the end of the day, you still have to have human beings work in those factories and work in those places to make sure those things are produced. So the shortage actually started with the people producing items to get stuff on the boat, to get it off the boat, to get it on the truck, to get the truck driver to get it to us as consumers to get it. Now, I have my opinion as to why the economy is cranking so fast as we roll in here to 2022. And yes, it's true. I know the federal government fired up the presses. They mailed out stimulus checks and gave personal protection payroll loans to businesses to basically prevent those businesses from going out of business. But the other thing is it caused people, the illness caused people to put their lives on pause. They didn't work, kids couldn't go to school, people didn't make purchases. It was an uncertainty. Now think back, people were buying things to survive. We were in survival mode. We didn't spend money on cars, clothes, boats, houses for many, many months. It just we went on survival mode. Remember the toilet paper shortage? Exactly. Quite simply, things that would normally be produced on a daily basis just were not being produced. Now, as the months have progressed, we've realized, okay, we've made it through this. We've survived and things must go on. Kids have to get back into school and they have. People have to get back to work and they are. As a result, it was kind of like flipping a switch. People started buying cars, boats, houses, motor homes. It was pretty much purchases as usual. But unfortunately, those purchases, those items, cars, clothes, everything, appliances, it just got absorbed pretty quick. It seemed like overnight. Now, at the same time, production did increase of such things to build cars, and people putting homes and home builders building houses, but it just simply couldn't keep up with the demand. And this caused the cost of goods to go up. But why is that even? Let's dig in a little deeper. Why did the consumption of goods make the price of things go up? You're probably thinking the same thing I am. Because they can. And look, I'm sure you heard lumber went up. Lumber went up through the roof last year. And as a result, there were fewer home builders building properties. There were fewer remodels happening. That slowed down the economy in that sense of housing. I mean, gas prices have gone up 50%, yet fewer people are on the roads because more people are working from home. There's less people commuting. Used vehicles are up 37%. Beef is up 13%. So the big question is, how will it all end? How will we slow down this crazy inflation train? Well, as I'd mentioned, the Federal Reserve is going to be raising interest rates in an attempt basically to slow the purchases, slow people from making purchases. They're also going to stop buying mortgage-backed securities, and they're going to stop buying bonds, which fuels our economy. But the big question is, what does that do for housing? What does that do for home prices? Will we see home prices go down? No time soon. And look, in order for home prices to go down, two things have to happen. Buyers have to stop buying houses, and more homes have to come on the market. Now, people are not going to stop buying houses, and here's why. In 1981, mortgage rates were the highest they'd ever been in the history of the United States. They were 18.45%. And guess how many homes were purchased that year, 1981? Interest rates were 18.45%. Just under 2 million homes were purchased in 1981. Wow. Yeah, and if you do the math, there's 365 days in a year. And so just under 2 million houses purchased meant 5,479 homes every day in 1981 were bought. Now you may say, Wayne, but dude, the average sales price of a home was way cheaper then. And you're right. It was exactly $68,900. That was the average sales price of a home in 1981. Now that would put the mortgage payment at $1,251 a month, but the average income was $22,390 a year. This means that your gross income would have been $1,865. So you're $22,390 a year, $1,865 on the month. You get approved for a loan based on gross monthly income. That would put you spending 67% of your gross income towards your mortgage payment. And that simply just couldn't happen. It wouldn't happen because banks can't lend you any more than about 32% of your gross income towards your mortgage payment. Now, to talk about inflation and a housing crash is concerning. Look, inventory of homes are low. Interest rates are on the rise. There's a shortage of everything. The fact is, until we see more homes come on the market, we won't see a balancing of the market to get it back to normal. And look, there are people out there that are fear-mongering, putting fear into people, spreading seeds of doubt, puking out information. And I'm just not that person. I'm going to give you the most accurate information that I can find, the most accurate information that I know. I'm going to share my experiences with you so you can make the best informed decision. And this is why I can say for certain, and look, it's not just me. I mean, the Federal Reserve Chairman Jerome Powell said the same thing, and others alike. There's no way we can stop this train this fast. It's not going to be a sudden thing, and it's going to take a little bit of time. And so for the next 12 to 18 months, we're still going to see appreciation. Will we see as much as last year? No one really knows. We'll know. Call and ask me this time next year. I'll be able to tell you. But then again, you'll know too, right? But look, in all actuality, buyers are buying homes at a rate of 300 times faster than homes are coming on the market. Oh my God! Now, sure, we're going to see more homes come on the market as we hit that spring market, and we're also going to see more homes hit the market as the foreclosures come on the market, because they basically took off the foreclosure moratorium that had a lot of foreclosures locked down for about 2 years. So this past July 2021, that has been raised. So we'll see more foreclosures, more home builds, lumber prices went down. We will see more homes come on the market. Now that said, we're also going to see an influx of more buyers come on the market. So yes, we will see more buyers buy homes. We will see more homes come on the market, and we'll see a little bit more activity. You know, a lot of that plays not just in the weather, but the time change. When we see the time change, it also plays when school gets out. You know, people want to move to a different school district. There's many, many factors that go into people moving and purchasing and basically buying big ticket items. But everyone must know, in order to get back to a stabilized market, it's not going to happen overnight. It's going to take about 12 to 18 months for people to realize. And look, a normal market is 3 to 4% appreciation. And that's not to say that, listen, there's markets, there's houses. You may be watching this and you're in California and you're going, dude, we've seen 26% appreciation. Well, the higher the jump, the more likely it is to come down. Will it come down to the original price that it was 2 years ago? I doubt it. And listen, this is what I'm really passionate about. This is what people have to understand why. Homes are owned by individual people. They're not a commodity. People like you and me own homes. Corporations own oil companies, lumber yards, lumber companies, cotton mills, coffee shops. You get it, right? And this is why I say 12 to 18 months to see more of a normalization of the market. And even then, I may be completely off. It may take 2.5 years. I know I've got friends in other cities. I've got a friend of mine in Portland, Oregon, and he's like, Wayne, it's been this way for years, like 7, 8 years. I know I personally am from Nashville, Tennessee, and I've got friends and agents, my own family, that sell real estate in Nashville, Tennessee, and they said, it's been crazy now for 5 years like this in Nashville. But listen, this is what I mean by homes are owned by individual people. Homes are not owned by corporations. And then don't get me wrong, I know there's people out there and be like, I own 14 homes, or BlackRock's buying so many of these homes. I get all of that, but the vast majority, the leading majority of homes are owned by individuals. I'm talking about the people, even if they run the corporations, they live in a home, they own the home they live in. And so homeowners aren't meeting, they're not getting together in a boardroom and having a homeowners board meeting and go, what are we going to do about these prices? When are we going to be able to slow this thing down? Should we drop the prices now? Should we raise the prices? I don't know. They're coming after us pretty hard. Supply and demand. No, that's not happening with homes. The only true way for a homeowner to know that their price is a sellable price is to put their house on the market and see if it sells, and to look at other properties that have sold within their neighborhood, comparing their property to the ones that have sold, to get justification that the price that they want to ask will work. And listen, there's a buyer for everything. There's a buyer for every home. I don't care the market. I don't care the condition. I don't care the location. It does not matter. If the price matches the condition, the location, the terms, the economy, there's a buyer out there for it. And of course, we all have heard location, location, location. And then we've also heard, well, it's only worth what a buyer's willing to pay for it. And that's very true. But the person that owns it has the goose, right? So it's only worth what the seller's willing to let it be sold for. So it's, who's right? But ultimately, the proof comes from the consumer. When the person purchases something, that gives justification and notification to the public and the world that that entity, that thing, that object, that home, boat, car, motor home is worth just that because a red-blooded person, human being, purchased it. But look, all that said, is buying home a good decision right now? Is like right now a good time to buy a house? I mean, interest rates are 3.75% on a 30-year fix. You can buy a $200,000 home, and taxes and interest and everything out the door at $200,000 is $1,250, $1,300 a month. And you're probably saying, where in the hell can I buy a $200,000 house, Wayne? Well, you can come on down to New Orleans. We can sell you a bunch of them. But at the end of the day, the decision has to be yours. Is it a good time to buy investment property? Do you have cash to buy investment property? You can get investment loans right now that are super crazy low. You can put 10% down and purchase an investment property. You can buy a home through a rural development loan, and you need no money out of pocket. You can do an FHA loan, 620 or higher credit score, and you can purchase a house. We get the seller to pay your closing cost. Any really good agent will. You see what I mean? It can happen. But so let's get to the question. How would one prepare for inflation? How do we go about personally, individually slowing inflation down? How can I participate in the cost of everything going up so fast? How can I slow it down? How can you slow it down? My answer, save more money, spend less, live on less than you make. Slow down the purchasing of things that are truly not necessary for you in your life. And look, most importantly, stay away from negativity. Stay away from negative content. As my mom always says, it does nothing. It doesn't bring you happiness. All it does is steal your joy. So choose to be happy. Give us a thumbs up, like our video, and most importantly, share these videos so that we can have a positive impact on the lives of others as we continue to move forward. Until next time, have a good day.